Oh man, what a vibe. Everybody, Adrian's Nunchuk, CMT Charter Market Ignition, welcome. What a vibe, what a good intro. It's actually got me vibing. Everybody, let me know if you can hear me, if you can see me. All fine and all well. We're gonna give it a quick check, everybody. Raise your hand, drop a comment. GM, everybody. Yeah, I appreciate everybody's patience. We are live right now. We are live. And Bitcoin is close to $100,000. You know, this is quite a spectacular thing after so many months, after so many years, after so many seasons, so many weeks, so many people that would say it's impossible for Bitcoin to break over $75,000. To so many naysayers, to so many doomsayers, to so many bears. Well, I think the market literally said, big fuck you. That's the market said. You know, we are close to $100,000 right now. And it's not me, kind of like, it's not my opinion. It's literally happened. It's undeniable. Bitcoin broke over $90,000, 93K and above is the local peak. That's spectacular, everybody. And if we think about it and even go deeper, arguably, you know, this is literally what I'd say, you know, is a lot of people kind of like getting strongly FOMOing into the markets. What's most interesting is that there's very little retail side to the market, which means that there's probably another 70 to 100% rally to the upside left before all those people that had been waiting, for the breakout bull market confirmation from moving their targets from $10,000 to 15 to 20 to 50 to 70 to $100,000. They are still not feeling confident that the bull market is in. And guess what? Bitcoin is near $100,000. Ladies and gentlemen, what a spectacular thing it is. What a history we're witnessing right now. And I'm here to talk you through the charts. I'm to take you kind of like for a brief story, painted with the candlesticks and painted with the bars. So without further ado, let's actually head and dive right into it, into a little bit of a market analysis, just to get a little bit of a check, right? And if we are to kind of like drop a look at the market summary on stock charts, ever since the Trump, you know, kind of like got into, into the out of the elections actually as a president-elect, industrials, Dow Jones Industrials pumped all the way from 42,000 all the way to 44,500. What a magnificent rally! Significant, powerful 5% slide rally to the upside over there. Right now, 43,500 with a little bit slight drop down today. 0.55% on the negative. S&P 500 broke 6,000 points, which had been this historical, kind of like a situation, I'd say, for so many traders, so many, again, naysayers, so many bears. You know, it's been a wet dream on the other side for so many bulls. And all in all, what we're looking at right now is that the markets are not really slowing down. I mean, there's a local pullback. Yes, there are some potentially island reversal for those who are familiar with the candlestick or the bar chart patterns. The island reversal is a situation where right on the very right-hand side top, you have two candlestick patterns or the bar patterns the gaps, or the slow called the windows. When there's a massive push, the breakaway, and the gap, a little bit of a kind of like a piece of a several candlesticks glued together, and another gap to the downside. This is what we typically call an island reversal after powerful rally, which basically means that there is a there is a high chance of an exhaustion of a trend and a potential short-term pullback. However, the trends are extremely strong. Just take a look at the bottom red curve of a 200-day moving average at the 5400 right now. What a straight, beautiful line. It's like a trend line. This is literally a trend line, not even using any pencil, any, you know, tooth, any I should say brush, any whatever tools, for the drawing kit. It's actually right there and beautiful. So if I were to bring it over to the next charts, then we would be looking most likely at the energy sector, which has been ramping up a little bit, except it's 0.14% up, 95 basis points right there, points for the XLE, the energy sector ETF, which has been a little bit rampant, lately, ever since September low, 83 over 90, right now 95, 96 against 83, and the low September, which is a typical bottoming pattern, bottoming season month. It leaves you thinking that the energy is ramping, and the energy is ramping. This kind of like not the most plausible situation for the Fed ultimately, because it also dragged a lot of traders into thinking that the bonds are not necessarily the best place to be, and the bonds sold off, from 127 down to 116, quite a sell-off of a 10 points right there. And on the other hand, that 10-year T-note yield basically moved from 36 all the way to 45, quite a significant boost as well, right? So arguably, that's something that alongside the strong dollar is not necessarily the most plausible situation for the stock markets, right? Because the stock market, basically rallying takes money outside of the more or less volatile and more certain, more kind of like the safer areas, such as the dollar, right? So the dollar pumping basically alongside, the stock market is, well, kind of like hand in hand. It's not necessarily the best type of a situation. What you want to see is the weakness in the currency, because that would attract people into investing in other assets, especially those high risk assets, and that would also be a sign of a lowering in inflation. So rising dollar is inflationary, rising energy is reinflationary. Inflation is, well, kind of like bringing the higher yields on the table, even though it's normalizing against what the Fed has been doing in terms of the reduction, 50 basis points and 25 basis points lately. It's all kind of like starting to come together finally for the first time in a very long time. And quick look at the VIX. The volatility index is at 15, so it's low, massive slide all the way from this kind of like a range, a high area between 15 literally and 25 area, 24, 23, 23 if you will. Massive spike in August, of course, after the entirety of the Bank of Japan situation, where there were like massive turnarounds, on the financial policy that was under the risk, and it also bottomed out, put in the bottom for Bitcoin, for stocks, and so on. And here we are below the level of 200-day moving average. So we are below the average, and below the average volatility means that traders anticipate more encouraging environment to place their trades and hold their trades onto for the next 30 days or so. And if we are to move, Joe, my man, God bless you too, my friend. God bless you too. Thanks for tuning in. God bless you too. Anybody who's joining in, God bless you guys. This is incredible that we are actually, all children of God, and it's great to see all those blessings. So go on, share your story, share your love, of everybody in the comment. And well, if we are to get a little bit deeper, let me show you a weekly chart of Bitcoin, and that Bitcoin chart is going to be laid over with the S&P 500 correlation coefficient. So if we go to this step instead, what we're looking at is literally this massive trend to the upside. And this massive trend to the upside, well, what it does is actually it shows you this trend line that happened to be well, the one that took us to the $69,000 in 2021 after breaking throughout 2020. And guess what? There's a 4-year cycle on the presidential election side. There is a 4-year cycle on the Bitcoin side. And there are so many similarities between 2020 and 2024 and 2016. And if you take a look at what was happening in 2016, 2020, and 2012, they were all massively bullish years in terms of kind of like a warm up. So 2016 was back then $450 all the way towards $1,000, right? So it was just merely a warm up before the final ultimate beast mode rally from 2017 start all the way to $1,000 to $20,000, 20x in 1 year. This is the dominant tendency of the market back then, 20x in 1 year. Then basically all the way rallying from $4,000 or from 2021 where it started, or I should say 2020 where it started around $8,000, $9,000, $7,000. We rallied to 2021 towards $50,000. What a significant, magnificent rally. And guess what? Here we are all over again in 2020 and 2016, except that we are bigger, that we are stronger, that we are mature, that we are regulated, that we are fuller of capital, breaching $3 trillion, Bitcoin reaching the position of the 7th largest asset in the world, with gold's capitalization at over 13 trillion, right? Meaning that for Bitcoin to overthrow gold market capitalization in terms of the entire global financial interest, that would have to pull off basically anywhere between 6 and 7x. Well, that would be awesome if that actually happens, right? Although, of course, it might be difficult. 7x. It means that the entire financial world's focus would have to basically switch towards Bitcoin. Well, 6x from current levels would place us towards $500,000 per Bitcoin. It's hard to believe something like that would happen. Although, there were many stories that people were saying Bitcoin was never going to break $1,000 or $10,000 and so on and so forth. So we'll see. Give it a benefit of the doubt. We don't have to go and risk our lives for it, right? Risk management is all that matters. I'm flying this chart right now to show you guys the bottom panel, the bottom pin. Actually, the bottom tab is right there at 0.67. That refers to the 7-week correlation coefficient. So it's a medium-term correlation coefficient between Bitcoin and S&P 500. The correlation coefficient is a statistical term showing you kind of like how much both assets travel together in one direction or another, how much of the price action is glued together and it's actually correlated. If the correlation is 1, then it means that an actual covariance, as in how Bitcoin and S&P covariance and how they vary together in exactly the same fashion against the product of standard deviations of each, right? So out of the entirety of the pool. So this kind of like gives you a little bit of an estimate that 67%, if you will, straight line kind of like a interpretation that 67% similarity is between Bitcoin and S&P 500 in terms of the movements. And that's something to consider, right? And as long as S&P 500 moves up, well, Bitcoin is going to move up in the 67% of the time. So at least there's 67% coverage. Of course, it's a little bit of a rule of thumb. There are more statistical kind of like impacts beyond it. However, that's a simple way to look at it. And well, speaking technically, right? Let's draw a pencil. Magnificent rally ever since. Guess what? This technical beauty got broken, right? This technical trend line got broken. And like I said, it reminds me so much of what was happening back then in 2019, right? 2019 and 2020. And it moves, like I said, 4 years, right? Every cycle bottoms out 4 years. 2020, right there, the verge of 2023 and 2022, the verge of 2018 and 2019, guess what? That's 4 years, right? And the peak, let's say the average, because there were 2 peaks. So if we take an average, so Q kind of like 3, if we are to average out, the peak, the Q3 out of 2021 places us somewhere to Q3 around 2025 for the potential peak, right? Of course, like I said, it's a rule of thumb. Of course, if we want to kind of like just go much more, what do you call that? Much more significant, much more accurate, then well, there are many different ways to analyze that, including the time cycle analysis, how like Gantt chart, yeah, like the geometry card charts, and uh, and well, long story short is that we are on the bullish side. We always, it always been, it always been, right? Massive rally ever since bottoming out and $20,000, 15,500 all the way, just $5,000 range, right? $5,000 range. $5,000 range is kind of like just barely what we're looking at in terms of the average volatility size right now for the market. So all in all, we're on the bullish side of the trend. This beautiful technical trend line. Well, some people say that technical analysis works only in the hindsight, and it's actually big BS, right? If you know technical analysis, you can anticipate stuff. You don't have to always be right because, well, following this incredible book by Ned Davis, or actually Ned Davis Researchers Fund, entitled "Making Being Right or Making Money," you can only choose one. It's impossible to be always right and make money, right? It's impossible to be always wrong and lose money at the same time, right? So you have to choose. If you want to be right and kind of like boost your ego, then you're not going to make much money because you're going to go for more certain and less rewarding situations. If you want to go for big wins, the ones that make you shitloads of money, then they happen infrequently by decision, which means that you're going to be wrong more often than not. And that means that if you want to make big money, you're going to be wrong a lot. And it's about managing the risk, and just it. So ever since the breakout, what we're looking at is basically significant push from Jesus, $66,000, 67,000, 40% for the sake of, what was it? In just a month. Jesus, 40% in just a month. What a crazy situation right there. And what a significant push, everybody, right? So if we definitely want to pay close attention to these charts. And actually, before we go further along, I wanted to remind you to everybody that if you're watching that on YouTube, make sure you hit the subscribe button, smash the notification bells. You know the drill. We need to kick those YouTube algos, especially if you're watching that also on Twitter and X. If you're watching that on the Burbness account, to make sure to actually stay notified. And again, hit the this tiny little bit of a bell button, to stay notified, because there are many cool things we're working on together, everybody. And well, moving along, one of the things that I referred to was a type of a breadth analysis. I'm going to show you guys a reference to the altcoin season, right? Because this obviously, when markets are moving up, it encourages a lot of traders to ask questions about the altcoin season. And I'm going to show you a little bit of a simple way on how we can actually detect, well, and so-called predict, although it's going to probably be more coincident than just predictive. Actually, let's do it right now. So let me show you this. Let's put it on the main screen. And if we take a look at the coin market cap altcoin season index, what we're going to notice, it just yesterday, it was at 36 points against 100, right? And what it does is, how it works is basically the altcoin season index says that when 75% of top 100 coins outperform Bitcoin in terms of the 90-day performance, it's official alt season. So 75 out of 100 top coins have to outperform 90-day performance of Bitcoin. So this is where the altcoins are taking over, right? And when altcoins are taking over, there is a high possibility, basically, that we're looking at the altcoin season. And if we're looking at the altcoin season, well, that means that there's shitloads of money to be made. And another way to kind of like just pay attention to it, arguably, is taking a look at the breadth charts, right? Because that's all it is. I mean, the altcoin season index, it does inform you about the breadth, and it does inform you about the momentum, volatility too, although that's even more convenient, right? So at our website, at theburbness.com, actually, if you head to theburbness.com, head over there. I highly encourage you. By the way, we're going to organize this special virtual trade camp. So if you're watching that, and you kind of like want to become a better trader in just a couple of days with the best expert speakers, panelists, with the best actual portfolio managers, with hedge funds, with VCs, with market makers, with the successful, profitable traders that you know and that you love off of Twitter as well. Do make sure to actually subscribe to this event because it's free. The Free Trading Congress. This is the 6th edition and it's free. You're going to get all the VIP membership. You're going to get all the access, all the workshops, all the live trading sessions with profitable traders. And there's lots of money on the table with Bitcoin near $100,000. So if you don't want to miss out actually on that opportunity, with so many speakers confirmed, like Kong right there, with Patrick Barbosa, with so many incredible people like Follis, Michael Van der Poppe, Christopher Inks, Jake Vujastic, 3D Capital, Karush, Carl Runfeld, Trader Dank, Axel Kibar, who is a CMT, incredible Web3 lawyers from Free Dots, and so on and so forth. So many incredible people in this space to tell you basically how not only to make it, how to preserve your wealth, how to choose wisely, and how to stay efficient legal-wise, tax-wise, and so on. Such an incredible opportunity for everybody. Go ahead to thebirdnews.com and actually this free sign-up Congress situation. And back to the point that I was referring, actually, it's breadth charts, right? So that's all you have to do. Just go on the tools and the tools tab and the breadth charts. This is what it's going to show you. And if we take a look at what's happening, actually, let's just make this one a little bit smaller. And if we take a look, put it over there you go, right? It's interactive, by the way. I love it. I love this feature. So take a look. What is it right now? The latest stance as of today is 26%, almost. So 26% by the breadth. Basically, breadth tells you is a technical indicator that tells you how strong the market is. Is it just one mover that moves and everything else just kind of like falls back, falls behind? Or it's the entire army of stocks and traders just moving in the same direction? Well, here in this context, 200-day basis, 26% almost of the coins are above their respective 200-day trends, which means that they are technically in their own bull run. So 26% of coins are in their own bull runs, which means that 74% are in their own bear market. So there is a lot of weakness, even though there's been a significant, massive improvement over the last 2 weeks, right? The breadth has risen basically from 8.3 all the way to the peak, over 40, right now 26. So it basically made a 5x, 3x, 5x significant boost. It's a significant breakout towards a better kind of like better environment for crypto to thrive. On the 20-day basis, we're talking about the spike towards 96%, and now slide down to 75%. So 75% in the short-term bullish, 26% are long-term bullish, and as of, where's it going to be? As of, there you go. The 15th, is it going to show me the 15th? Come on. There you go. The 15th is 60%, almost 59% to be more accurate. So 59%, meaning 41% are actually bearish 50-day basis. So medium term is 60% bullish. 20-day short term is actually 75% bullish. And the long term is 26% bullish. So the way to read it is that it shows basically that there seems to be like a massive awakening. And if this is a massive awakening, well, then arguably we're looking at a potential continuation sign towards this direction, right? So if we actually, by the way, if you have any questions, any particular requests, any particular suggestions, feel free to drop them in the comments, everybody. I'm going to try to take on a couple of those. And I promise to show you this chart, which is exactly what I'm going to do. And I'm going to replace the screen for you to see the RSI, right? The RSI, which is the relative strength index, not to confuse it with the relative strength, which is a comparative, not absolute return, kind of like of one asset against the another. Here, we're looking at the RSI against 75, at 75 with the peak at 84. Technically, anything above 20, below 20 is oversold and above 80 is overbought. However, the beauty of the technical analysis in those trends is that the market can remain overbought for many, many months, right? So the fact that the market is overbought and it's overvaluated, well, it means truly nothing unless we're moving sideways. If we're moving sideways, then if the market reaches the overbought area, then it's more likely to return. However, if it actually breaks out and it continues And if you see the moment that actually significant breakout happens, there's most of the buyers that are coming in, which means there are fewer sellers, which would mean that the markets are more likely to rally, and the market may flash an information warning to you that the market is overheated, except that this is where FOMO kicks in and this trend propagates and it goes even further and higher and far and higher and so on and so forth. So all in all, the highest RSI breakout ever since March, right? So the highest RSI in 9 months. That's a record because it happens only once every 9 months, which means there's scarcity, which means it's important, which means it's a signal, right? And at the same time, if we just even kind of like turn off, if you will, the RSI itself, right? What's going to remain is the 50-day RSI. And the 50-day RSI is basically at 61, 62 points right now as we speak. And if that is the case, well, then it means that it's actually not only breaking, to the upside. And because, the RSI is basically a derivative of a price naked, then you can apply same technical analysis patterns and trends and some sort of breakouts and so on. And it's going to give you an early stage. Quite often, if it's ranging, it's going to give you like an early bullish or bearish divergence, which may be a little bit of an early notice about the potential trend reversal. Though all in all, we are here the highest levels overall, where we've been last 9 months, and the 50-day trend is rising. And the 50-day trend has risen from 45 points all the way to 62, and that makes it a proper 35% increase on a 50-day basis. So the medium-term momentum is ramping up. And volatility, this is the ATR against the 50-day ATR, right? This is a 50-day ATR. This is all those dots are points basically about the ATR, and that ATR is an average true range, which basically measures the spread, or actually the spread and the width of the movements, right? And it's going to give you the maximum kind of like an equivalent of the highest point in price against the lowest point in price over a certain period. In this particular case, it's going to be, if I'm well, by default, I think, as far as I can recall, by default it's 14. You might want to check it, although TradingView offers the 14 as the main default point. That's the one that I'm using, and I apply the 50-day smoothing factor, right? 50-day moving average, just taking a 50-day average out of that simple arithmetical average to give me the information about the trend. And the trend is rising right now. It's been kind of like dormant for quite some time, and it's been on a downhill downslope for the most of the year since picking up the top, in April and May. We are here all the way from 1900s to 3600s. So 100% increase in just, well, not even a month, in just 3 weeks. 100% boost on the volatility is something significant. And it also informs you about the risk, right? Because it tells you that the average spread between the high and the low over the last 14 days is basically 3,300. And if that is 3,300, then guess what? This becomes your risk, because that becomes the average regular volatility, right? Only after we break out further away the volatility boost, and this is considered signal. Anything happening between within a 3,300 range, it's considered natural, normal, and range oriented, right? And taking a little bit of a closer look, how beautiful a volume spike it's been. How beautiful of a volume spike. Gee, just take a look, right? It's going to be one of the highest ones in a very long while. And it's happened. And it's happened after, like I said, Bitcoin rallied. After this volume spike happened, Bitcoin rallied 40%. What a significant push. From the peak at 93,500 almost, we're just 6.5% away from $100,000. It's not going to be easy, right? If we are to play a little bit of the guesses and directions, of course, take it with a grain of salt, because I don't know what's going to happen. I have no way. I've made so many mistakes. I lost so much money trying to predict the markets, and I'm not doing this anymore, right? Predicting is fine, except that I don't use it for trading. For trading, I've got my own systems, which I'm going to show in a moment, right? However, my baseline point expectation would be that if we are to get close, and that might be the case, that we're going to go close to $100,000, the first is going to anticipate a lot of selling pressure right there, because, well, that's how our human mind works, right? We fear of round magical numbers. We somehow attribute, even though it doesn't make any sense whatsoever, we treat the round numbers differently than any other even or odd digits. The round numbers, and only in our minds, are special. In reality, they are meaninglessly same as anything else. In our minds, they are easy to remember, hence we anchor more to them, hence we give them special focus, hence we give them special treatment, and this is why we park a lot of sell and buy orders around the wide scope of the round numbers. So it's only our human mind that actually materializes those sell orders right there, which is crazy when you think about it. However, this is also why a lot of initial kind of like an opposing force is likely to happen. So I would be skeptical in terms of breaking the 100,000 on the first go. It's a one more digit basically to the entire setup of the numbers, right? It's a historical breakthrough moment. It's like going from 1,000 to 10,000. It's like going first time above $1,000 and first time above $100. Going up above $100,000 is a special, right? And because it's special, in our minds, people are going to feel afraid of it. They're going to feel concerned. And when they're going to feel concerned, they're going to sell it off and take profits, especially after massive rally. So I would expect a little bit of a slowdown around $100,000. Most likely, if I were to guess, a little bit of corrective December, maybe towards the end of the year, which typically would rally up towards the Trump's inauguration, when it's going to happen early January or so. January, throughout January, most likely bullish conditions. February is typically a bearish setup, and March, April is going to likely take us to new all-time highs. That I would anticipate that based on the numbers, they're going to give us the peak somewhere between $150 and $2,000, and for so many different reasons. Also, if I'm supposed to bring it over to you, let me actually show you real quick. So the Google search, let's take a look at the trends. We're going to take a look at the Google trends right here with Bitcoin. Let me share you the screen just in a moment. And what we're going to see, everybody, right? This is the last day, but we want to last 5 years, for instance. What is going to tell us? Okay, this is an anticipation, but the last time it showed you, there was it this crazy? 35%. This is a 100 point scale. So 100 is the point of reference basically for the peak of 2021 in May, which is where the Google search for Bitcoin trends kind of like just went crazy, right? And here we are right now. The latest record from, the last week is at 35. The anticipation for this week to close tomorrow is likely going to give you 68%. So it tells you that there's 68% in terms of the projection. The data is not corrected just yet, so take it with a grain of salt. Anywhere between, I'd say 35 and 68%, most likely is going to be 55, anywhere towards 65 or 68, is going to tell you that only so many people, right, searched Bitcoin against 2021 peak. And when you think about it, when you do really think about it, what is going to give you about the concept is that only 6 or 7 out of 10 people against what they searched in 2021, right, got actually their hands on Bitcoin right now, most likely. 6 or 7 out of 10, which means that against 2021, and we are so much bigger right now. We are so much bigger. We are so much mature. The funds are here, pouring in hundreds and billions of dollars every month, right? The regulations are here, the MiCA regulations, markets in crypto assets. Donald Trump selected as the pro-crypto president, the pro-crypto Republican Congress. Wow, this is crazy. And this may set up actual precedents for so many different countries to contribute their actual national reserves into Bitcoin. And if that happens, then we are talking central banks coming from January 1st. Actually, they're coming because they got recommended by the Basel Committee, the supervising body, to invest in Bitcoin 2% reserves or more, or different types of digital assets, be it stable coins, utility tokens, or Bitcoin, giving all types of different risk measures. Although all in all, what matters is that we are looking at a historical joint venture between the retail people and the institutions. Back then, it was only people, retail people. The institutions were very few because there were no regulations that would fit and let them be on board and trade. And here we are, so much bigger, getting close to $100,000, and there's only 7 out of 10 people max out of 21 that got interested in Bitcoin. And we're going to go so much higher with that because the adoption is so much bigger. Right, so it gives you some food for thought. And another point if we are to give to make this kind of like a session closely tied to Bitcoin, if we take a look and actually give a proper refresh, let's see what is going to happen. So MVRV is one of my favorite indicators. MVRV is basically the market value realized value. So it compares the market capitalization against the summary of the capitalization of monies of Bitcoin exchanged against encrypted in the blockchain, basically stored in blockchain, right? So it shows you the actual amount of money exchanged via blockchain and in blockchain in Bitcoin against what the market prices it to be. And typically when it goes over 7x, which means that the market cap is 7x bigger than the actual amount of money being exchanged in the markets, so 700%, this has historically been the peak. Every single time there was a peak in a market, right, it was over 700%. So here in term, well, sorry, it's not actually, well, 700%, yes, but except that it's a z-score, so it tells you about the number of standard deviations against the mean. And there is this mean basically about the realized cap, right? And the z-score is at this very moment at 2.8. And 2.8, well, compared with 7 divided by 2.8 gives you 2.5, which means that we are 2.5 from here and 2.5 from here, from $90,000 or so, right, gives us $225,000 as an immediate kind of like an expectation for the market to linearly kind of like adapt and give you the actual warning of the market overheating. So by this metric that has been fairly consistent and accurate so far, the market is going to give you a warning, the peak warning, and it may still keep going for some time. It's going to give you the peak warning at $225,000 as of now, right? So unless there is a massive drop in momentum and the price remains stable, or the actual other way around, if there is a massive significant correction, however, the market is ramping up still on the blockchain side, on the on-chain side, then, well, there's so much more upside left. That's what it seems, right? Simple maths. I mean, of course, just take it with a grain of salt. Like I said, I have no idea to know what's going to happen. I wish if someone knows what's going to happen, then please tell me. I'd love to know that. However, it's like I said, it's simple maths. It's not my opinion, so I'm not giving you something like crazy. It's it's just 2-3 digits divided and put against one another. This is what it gives you for the result, right? So it's pretty incredible if you ask me. Let's take a look at the altcoin market. Let's take a look at the altcoin market, everybody. Here we go. And the altcoin market seems to be on the rise, right? Massive spike since Trump's election, 880 billions, right? Almost 900 billions, all the way to 1.12 trillion. Basically, it means there was a significant inflow of money into altcoins as well, right? Although there's been massive, bigger push towards Bitcoin, because if we compare and actually add this another point, let me get you this one. So add an indicator, add alert, add indicator. Well, is it gonna show you? How do I add it? Come on. Okay, we got those. We got those. Oh, there you go. Total or Bitcoin market cap or dominance. Okay, let's pair it with dominance. Then let me show you the trick. It's gonna be move to the new left scale. And well, the big portion of money right now is basically being moved towards Bitcoin. The Bitcoin dominance ever since 2023 keeps rising, which means that there's an increasing interest in Bitcoin, right? And this increasing interest in Bitcoin, um, if we are to be more specific, then well, then it tells you that it's quite a massive thing. So if we are to go here back to the regular and here back to regular, then the nominal Bitcoin dominance is at 60%, 61% right now as we read. 61% means that 39% of the entire money in crypto, right, out of this almost for a trillion, which basically makes it right now as we speak, 1.76 trillion, $77 trillion. Then most of the interest of the entire market is in Bitcoin, not in altcoins, right? However, there is an decent change. There's like this decent kind of like a breakout, whatever pattern you name it. We broke the base. We are above it. We are highly above it, highly enough to believe that this breakout is significant, is meaningful. Because otherwise, you would have to believe that 880 push towards 1.16. So quite a push of almost what's it gonna be, like 200, almost 200, more than almost $200 billion. Someone would have to accidentally pour in $200 billion. Well, I wish that happened to everybody after this bull market, so that everybody has 200 billion to spare, so that they wouldn't even notice the difference after they spend it. Although most likely it's not going to be the case, right? So it is actually meaningful, and it is significant. It is statistically undeniable that there's a rising interest. However, still most of the money, 60%, 61% of the money flows into Bitcoin. So altcoins, like I said, remain just on the second. Well, what do you call that? It's just like a dessert, right? The main meal, the main dish is still Bitcoin, and that is confirmed as well by, like I said, the breadth at 26%, 26%, where 74% or so are actually in the bearish terms, which means that 76% of the market is bearish on the breadth side, right? So take it as you will. And well, let's give it a quick check to a couple of altcoins as well. I'm going to open up a couple of charts, so bear with me. I'm going to show them to you real quick. Oh, wow. There's going to be plenty. Step by step, one by one. Let's do it then. Starting off real quick with a shout out to our partners at Credify, who are incredible. Our WA bridge between Web2 and Web3, bringing the tokenized bonds and more. Well, highly encourage you guys to give him a follow on Twitter, on X. However, what's even more relevant is the technical aspect. So the technical aspect is that there is a strong support at 0.013 and a strong resistance at 0.026, and even more accurate resistance, more kind of like recency based, more recent resistance is at 0.018, if you will, the round numbers just to approximate it, or 0.0177, right? All in all, we are kind of like moving in this type of a sideways environment. If we're moving in a sideways environment on a decreasing kind of like a flat RSI, because if you can tell, the flatness of the RSI is still here, right? The momentum is flat. It's just not kind of like, there's no significant breakout of over the last months this year. Even though there's been a significant push from the very beginning, 7x, 8x, basically from March to April. What a significant, beautiful push, right? So we know what Credify is capable of, and right now it's building a base in between 0.013 and 0.026. So 13 points up. Well, that's a point to consider, right? So the trend is actually not constructive truly until it breaches and breaks successfully 20.026, except that the bulls are getting early warning signal for the taking the position at 0.018, or actually above it, with a minor stop and a pit stop of 0.02 with the 200-day moving average, which is kind of like slumping down a little bit, right? Another quick point. Someone asked me the other day. My friends asked me. Shout out to our friends from Tech Valley. Actually, we are, we were very kindly welcomed in Abu Dhabi. Shout out to everybody who's from Abu Dhabi and the UAE. What a beautiful region that is, and crypto friendly, of course. So this is a little bit of a catch up. Inspired me to show off this chart. Quick way to figure out whether it's bullish or bearish. The coin is bullish or bearish. Think about it. First point. Hide the charts, hide the candlesticks. You don't need them, right? This is noise. What you need is 3 time frames: 200-day moving average, 50-day moving average, and 20-day moving average. That's all you need, right? So what we're looking at, right, is that top curve. This top curve is actually moving to the downside, meaning that the longest time frame is downwards oriented. It's bear market. This is what it defines. If it rises, this is a bull market. If it falls, this is a bear market. The flat 50 blue curve is flattened. However, I mean, it's blue. It's a little bit lifted to the upside lately from 0.26 all the way to 0.29. However, this is slight increase, slight improvement in advance. Most of the time it's flat. And 20-day, which is the most curvy one, is the short-term trend. So the long-term trend is bearish. Medium-term trend, the blue one, is slightly bullish, except that it kind of like moves more randomly than not. So I would classify it as sideways and as neutral. And 20-day trend is oscillating back and forth, basically as a sine curve type of a situation. So it's also neutral. So neutral, and bearish. That's a simple way to take a look at those coins. And well, moving further along real quick for SUI, right? For SUI, everybody. SUI is pumping crazy. It's given us very significant, decent rally, everybody. But anyway, I promise this stream to be a little bit shorter, but here we are going for up, I think, for the past 40 minutes or so. So please apologies for the length of it, although it's been quite a while since we appreciated Bitcoin at $100,000. Guess what? It's never happened before. So this is a lot of good reason to get excited. Significant push all the way from 1.6 almost to 3.6, right? So 2 points, $2 added per coin. What a beautiful push, right? Over 100% rally over there. And the key support right now is at 1.6. And how do I know that? Well, guessing not. It's 200-day point of reference divided by the 200-day B-Pro trend line. The more recency bias, more weighted to the recent data, skewed the 200-day moving average. Not simple. The point to concern is a little bit that we didn't actually raise the RSI. We didn't break the RSI. So the RSI at the moment of a peak was here, and the current RSI is lower than we are on the current peak. So this builds up a little bit of a warning for the bearish divergence. And bearish divergence actually is a situation where, like I said, you have a rising tide on the prices and the falling tide of the peaks, on the momentum, because it means that the momentum keeps slowing down. If the momentum keeps slowing down, then guess what? This is actually a potential reversing point. So pay close attention to it. SUI is bullish until or as long as it stays above 2.85. And if we go further long, it's gonna take me to to Popcat. All right, and what are we looking at? What is this one? Hold on. This is a 50-day trend. All right, because it was a shorter one. This is a 200-day trend, okay? And this is a 200-day B-Pro trend. And guess what? All of them are rising. So it means the 50-day trend is bullish, the 200-day trend is bullish, 200-day more recent data, recently data trend is bullish, except that there is a warning signal. And the warning signal is this literal bearish divergence, right? This is exact situation what I referred to. This bearish divergence, like I said, it may continue like that for some time. It doesn't necessarily mean that a reversal is pending any minute and has to reverse in the same minute I say so, right? However, pay close attention, because this is a little bit of a warning that the market is overheated, and when the market is overheated means there's not enough buying power and the selling power is actually taking over, which means that people are selling the tops more often than they are buying the dips, which means that it's more likely to revert anytime soon, right? So I have no idea when it's going to go. Perhaps it's going to go, another wave towards like $3 or higher. However, as long as the main dominant trends remain bullish, to the upside, then the overall trend continues the legacy to the upside overall, even though there might be a local short-term correction. And here is Bong, right? And this Bong, Jesus, love these meme coins. And the bonk is, by the way, if you are into meme coins, drop a comment below, raise your hand so that I know who I'm talking to ultimately. But here we are, broken the key resistance at 25 right there, with a local peak, with a local slide down and a slump at 0.17 right there, with so many zeros. I don't even know how to read it properly. 30-1 all the way is a key support right now, and we're bouncing 38.80. Well, quite a significant push, and this is based on the volatility. So massive volatility boost, and this volatility means that tells you that this is key support based on the volatility. The RSI is improving, right? As against, are actually unlike the previous Popcat case, the RSI is making higher highs and higher lows, which is, or actually higher highs. There was a higher low here, so I was wrong about saying that. There's a higher high, so there's kind of like discrepancy. Although this higher high means that if it aligns with the price ascent, well, this is some sort of like healthy. So I would say that as long as 3.3 to 1 is secured as the main kind of like a support region, then what there were previous turnarounds in that region area. So this clearly maybe serve as a technical point of interest. Line in the sand, then well, it seems that we might be knocking on the all-time highs doors anytime soon. And if that happens, past the all-time highs, it may actually be significant. So yeah, I'm actually gonna set up like a proper alarm when it breaks, because buying into all-time highs, is something to consider. Right. So let's drop the alert, because when the moment it breaks, there you go, it's gonna notify me. And the final one, the whiff, dog whiff hat. Geez, there are so many people that love this coin. Similar situation, right? Knocking on all-time highs, quite significantly right there. Basically matched it, up almost $5. Key support 3.14. It's actually clean right now. Significant push lately, so I would expect the lines that the previous kind of like a polarity change setup, where the previous resistance turns into a current support. So there's additional confluent reason for people to believe that this support may hold, and this people's belief is actually going to make it true, most likely. The concerning point is the RSI is low, right? And the mid, when it's in the mid and not in the extremes, it means that the trend is not so strong. So we want to see a little bit more strength and a little bit of the RSI pushing towards 80 to for the upward trend to continue to actually take us to the all-time highs, because the trend is going to take us to the all-time highs most likely as long as we continue to see the RSI trending above 80, if that is the case, right? So overall, several cool structures. Like there was a double bottom. Like if you want to play and practice the classical technical analysis, you might draw trend lines, search for those patterns. For instance, right over here, right, the significant trend line, kind of like a breakout, or the double bottom situation right over here, right, even though it was kind of like flowed, that ascending triangle type of a situation here with the flat highs and the lower and the higher improving lows. And so on and so forth. Otherwise, the trends are rising on a 200-day basis, although the 200-day simple moving average, has been flat and insensitive. So there's been this, they're all coming together to crossover against this invisible apex. And when that happens, actually, are most likely looking at a potential boost and a confirmation that the trends are looking bullish. And without further ado, everybody, this is the final invitation. Again, a reminder, so that if you go to thebirbnest.com, you can actually secure yourself a free trading congress seat for 2024, November 25th, November 30th. It's free, right? You're going to get free access to all the educational aspects, all the VIP software, all the strategies, indicators, all the live workshops, live streams, with the live trading sessions with traders, 24/7 support from our team. All the exclusivity is there. No trolls allowed, no idiots allowed. Only there people really serious and about learning from beginner friendly materials with the actual guidance from me and my team. And that's all coming at zero cost. It's gonna cost you $0, 0 cents, and zero whatever currency. It's gonna be free with the best speakers in form of a virtual trade camp conference, the best speakers, the best traders, VCs, hedge funds, market makers, you name it, CFAs, CMTs, professionals, portfolio managers, people who know their shit. They're going to be there to teach you for free. So go ahead, sign up. It's free, thebirbnest.com. Go ahead, join now. It's going to take you to the wait list. Just put your email and you're on. And if that is the case, then I think it's a perfect moment to actually wrap the show. And everybody, I've been your host, Adrian Zdunchuk, CMT. Thanks for tuning in with me. There's over 2,700 people. And God bless you, everybody. Beautiful times ahead. Strong rallies.